What's up everybody? Nate here. So the monthly inflation report for February 2022 has been released. And shocker, inflation hit a new record high. Year over year, inflation is now well over 7.8%. The highest that we have ever seen in over 40 years. But unfortunately, it looks like inflation is getting even worse in our economy, as it actually is starting to grow even faster than both Wall Street and investors were anticipating. In fact, inflation for February 2022 grew at a faster rate than we saw in January of this year. And with the war between Russia and Ukraine right now and money printing in the United States continuing, it doesn't look like inflation is going to be ending anytime soon. So today I want to talk all about this brand new inflation report, go over all of the details and numbers with you, and show you exactly what this is going to mean for our economy right now and for the future of our country. But before I get into all of that, do me a quick favor and hit, smash, or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now let's talk all about the inflation report for February 2022. All right, so let's jump right into the numbers here. Inflation for February 2022 grew to around 7.8%. That is a 0.8% increase month over month when compared to January of this year. Wall Street was expecting it to only grow by around 0.7% for the month. And while that's only a little bit higher, it shows that inflation is getting bigger in our country. This is the highest inflation reading that we've seen since January 1982. And pretty much everything is up right now, even if you look at the core inflation numbers, which completely strip out food and energy prices, two of the biggest things that are going up like crazy right now. Core inflation went up by around 0.5% month over month, and it's now up to around 6.4% year over year. That's the highest since August 1982. Now let's go over the specific numbers of what is actually going up in price. Energy went up a ton in February 2022, and it's pulling around a third of the inflation numbers right now. Energy prices in the United States went up a staggering 3.5% for the month. And they're not alone. Shelter costs, which are another 1/3 of the CPI inflation index, went up by around 0.5% in February. And shelter costs are now 4.2% higher than they were year over year. And to be even more specific, gas prices went up by around 24% month over month and are now over 53% higher year over year. And finally, food prices went up by around 1%, and food at home prices went up by around 1.4%. That's the fastest month over month gain that we've seen since April 2020, the early days of the pandemic. There were some very slight pieces of good news on this month's consumer price index though, and it all has to do with the auto market. Used car and truck prices actually declined by around 0.2%, their first significant drop since September 2021. They're still up by around 41.2%. However, new cars are a completely different story. Their price actually went up by around 0.3% on average month over month. And over the last 12 months or so, their prices have increased by around 12% versus used cars, their prices are over 41% year over year. So there are your basic inflation numbers. And now here is what all of that actually means. Obviously, based on this report, you can see that prices in the United States are starting to rise pretty significantly. Even if you don't look at this report, you can tell that prices are starting to go up. So what exactly is driving inflation this high in 2022? Well, the first and most important is the Ukraine-Russia war. Ever since about the mid part of February 2022, Russia and Ukraine have been in the midst of a conflict, and this has meant that energy prices in particular are going through the roof. Russia is a huge supplier of a ton of things the United States uses every single day, including oil, wheat, and some precious metals. Because of massive economic sanctions that the United States has placed on Russia, and other countries have done the same, Russia is now retaliating, and they're making it extremely difficult to get a lot of their goods and services. Because of that, now you've got some big supply chain issues, and the price of everything is going up because because of it. Simply put, it's hard to get stuff into the US right now, no matter what it is. And oil is a huge significant factor in that, because all of these cargo ships and all of your vehicles that transport things to your door and to the grocery stores have to pay more for gas right now. Like I said, Russia is a huge producer of oil in the world, and the United States just announced that it's going to completely ban all imports of Russian oil in the country. Now, the United States does not get a ton of oil from Russia, but estimates show that we get around 7 to 8% of our oil from Russia. Cutting that out is going to mean that prices naturally go higher because now you have less of it. So as that conflict continues to escalate overseas, you're probably going to see the price of goods and services continue to rise in the United States. I mean, the CPI showed that around a third of its entire index was all related to energy, and energy is going way up. That eats into Americans' budgets overall, which is going to be pretty bad for just about everyone in 2022. So that's the first thing you need to keep in mind. The second thing is all about money printing in our economy. So back in 2020, we had this thing called a pandemic. It seems like it's kind of gone away at this point, but back in 2020 and 2021, it was a pretty serious deal and dominated news all throughout the world. And obviously I'm joking about that. It's still a pretty serious deal, but the fact of the matter is the United States government and the Federal Reserve didn't really know what was going to happen. We set up economic lockdowns that meant people couldn't work for several months. That disrupted our supply chains and in turn caused inflation to go up because now you have a supply and demand issue. On top of that though, with people not working, that means people aren't getting a paycheck, which means they can't go out and buy the same amount of things that they could before. That's bad for businesses, which means if businesses don't get paid, they're not going to be able to make profits, which is how they pay their employees in the first place. So that's when the Federal Reserve and the United States government decided to step in and print trillions of dollars in economic stimulus. I mean, the definition of inflation is when your monetary supply starts to go up. And that is exactly what happened in 2020 and in 2021. We had several bills that were valued at well over $1, $2, and even $3 trillion. All of that money eventually circulated back into the economy, which meant people had a lot more money to spend now, which means they had such high demand for everything, and with businesses still reeling from the pandemic and not able to increase their supply fast enough, well, now you have prices going up even faster. Not only that, but we basically had a bubble of everything in 2020 and 2021 because the United States Federal Reserve printed so much money and they added trillions of dollars into the stock market with their quantitative easing program. Well, that meant asset prices and the housing market and the auto market and the bond market and every other market that investors like to put their money in went up too. So you had record high pretty much everything in the United States. And with prices going up that quickly, businesses now had to start paying their employees more because if they don't, then their employees aren't going to be able to afford anything. So we did see wages increase in 2021. They went up by around 4.2 to 4.5%. However, real inflation actually went up more by 7%. So wages in 2021 actually decreased because inflation went up so high, even though employers were giving out bigger raises than they have in a long time. But all of that money has to come from somewhere, and it all came from the Federal Reserve and United States federal government. We printed more money than we pretty much ever have in the history of our country. This was all to solve the pandemic problem. And unfortunately, there's not really much that you can do about that. All of that money is still in circulation. Americans can spend it or save it or invest it. And let me tell you, the United States federal government and the Federal Reserve isn't just going to stop printing money in order to kind of level out all of their money printing of the last 2 years. No, it's going to be the opposite. The federal government and the Federal Reserve are going to continue to print money. And in the future, they might need to print even more to solve even bigger issues. So that alone means that inflation is going to continue to go up. Now, those are sort of the main reasons why inflation is going up in the United States right now. But what exactly is coming next for inflation and our economy? Well, because inflation continues to set new record high and new record high, the Federal Reserve and the United States government are now going to have to respond. Remember what I said happened back in 2020 and 2021? Well, now the reverse is going to happen from the Federal Reserve. Of course, the Federal Reserve is going to continue to print money, so you're going to see inflation go up a little bit. And the federal government is going to introduce more bills that are going to need to be funded. And right now, the United States does not bring in nearly enough tax revenue in order to cover all of its debts, which means more money printing just in general. But the Federal Reserve has another power: interest rates. When they stepped in back in 2020, they also lowered their interest rates down to 0%. This also increased demand because now people could go out and get a mortgage or get any type of loan for that matter and pretty much save hundreds of dollars over the lifetime of that loan. They wanted people to spend money because they were super unsure of what was going to happen next. Now in 2022, they want to make it much harder to spend money. They want to eliminate that demand in our economy, so they're going to raise their benchmark interest rates. Now, Federal Reserve Chairman Jerome Powell has talked a lot about this over the last few months, and he is confident and has assured Congress and the American people that the Federal Reserve is going to do whatever it takes to lower inflation in our economy. And he also said in a meeting with Congress last week that if inflation continued to rise, then he would start getting even more aggressive with inflation. So far, he kind of alluded to the fact that the Federal Reserve is going to raise its interest rates by around 0.25%, up from 0%. It looks like they might do this around 3 to 5 times in 2022. This will help eliminate some of the demand in our economy because now with it harder for banks and financial institutions to get money in general, well, they have to be a lot more careful with who they give money to. That means their interest rates are going to go up as well, and it's going to be just harder to borrow money. Not impossible, but gradually throughout 2022, going to be a little harder. Now I know what you're thinking. Why doesn't the Federal Reserve just raise its interest rates super high and get rid of inflation in 2022? Well, they can't exactly raise their interest rates too quickly or way too high because this will basically cause a recession in our country. You want to give the entire market and jobs market time to catch up to the inflation level. You want businesses to catch up paying their employees more, and you want people to be able to start affording things again on a normal basis. Which means you kind of have to gradually raise your rates and pull your stimulus as things start to improve in your economy. If you do it all at once, well, now nobody can afford anything because it's impossible to get a mortgage, an auto loan, or a personal loan. In addition, it's impossible to spend on a credit card because credit cards, for the most part, have adjustable rate interest rates. That means depending on the economic climate and the interest rates from the Federal Reserve and your bank, that is how much you will pay in interest every single month. Interest rates have been low over the last 2 years. But now they're starting to go up, meaning it's going to be harder to spend there too. Spending is important for our economy because if people aren't spending, then nobody's getting any money. And if nobody is getting any money, then businesses can't pay people. And the government can't get any money either. That is a bad situation. So the Federal Reserve has to ride the line between being way too aggressive and not aggressive enough. Now, I will say that experts and investors on Wall Street believe that the Federal Reserve is way behind inflation right now. They believe that interest rates should have started being raised a long time ago, and that a lot of the stimulus probably should have been pulled months ago as well. But the fact of the matter is that it hasn't, so now we are stuck with this inflation crisis. So that's from the Federal Reserve side. Now, when you talk about the factors of inflation caused by Russia and Ukraine, things get a little more complicated. The fact that oil is going up so high right now is because there is such high demand for it, and it's hard to get oil from Russia and other countries. The United States gets most of its oil from 3 countries: Canada, Saudi Arabia, and Mexico. Now, the United States does produce a ton of oil ourselves in the United States, but we still rely on other countries for our oil production. And it's not just a switch. Those countries are going to have to start producing more because of this Russia-Ukraine crisis. Just about every country in the world is completely banning oil imports from Russia right now. And like I said, while we don't get a ton of oil from Russia, it's still difficult for our supply chains. And the hit on Americans' budgets will be pretty huge. But it's going to take time for the United States and these other countries to start producing more oil. It's not going to happen overnight. So as that conflict continues to escalate and more people want oil, then the price is going to continue to go up. The only way that it starts going down is if the United States and the rest of the world has a surplus of oil. That would mean that these companies and businesses are trying to get rid of it, so they sell it at a cheap price, which means oil will go down. But gas prices in the United States were going up anyway, even before the Russia-Ukraine crisis, and that's because the world hadn't been making enough oil to meet demand for a while. Because of the pandemic, nobody was driving, nobody was traveling, so there wasn't really a need for gas. By the end of 2021 though, and now into 2022, there is a much bigger demand, but the world wasn't producing enough of it, which means there was kind of a shortage, making gas prices go up. Now this Russia-Ukraine situation is making things even worse. But also you have the other industries that Russia is a major powerhouse of. Wheat prices are going up all throughout the world right now, and so is the price of some metals, like gold, silver, and nickel. And lastly, we gotta talk about Americans and their money. So inflation is going up, which means the price of everything is going up. And the only way for people to really combat inflation, realistically, is to make more money. I mean, prices and inflation doesn't really ever go down. I mean, there have been some moments in US history where we saw negative inflation, but it is super rare, and I don't expect that to happen anytime soon. Which means even though prices are going up right now, for the vast majority of things, don't expect the prices to decrease ever. And right now, Americans are losing a ton of cash because, like I said, in 2021, even though wages did go up steadily, inflation was way too high, meaning that we actually saw workers lose around 2.4% in their wages. And in 2022, that is only continuing. On this recent report, it showed that wages actually decreased by around 0.8% when compared to inflation. So businesses are not paying their workers anymore. And Americans are getting less money because now everything is costing even more. That's gonna be a big problem because now you have a financial bubble that is about to burst. Americans can't put their money into investments anymore. Americans can't buy that house that they wanted, or any consumer item, or that new car because they simply can't afford it. All of your markets in the United States have the potential to explode because now nobody can afford anything because everything is rising way too rapidly. I mean, just look at the housing market. Housing prices have gone up nearly 20 to 30% over the last 2 years, but Americans aren't making any more money. So how exactly are they going to be able to afford a house? They can't. And when you start to see Americans spending a lot less, the first thing that we could see happen is that Americans get into even more debt because they're draining their savings accounts and spending their paychecks every single month. Then they're gonna have to turn to something in order to pay their bills. That could be loans, or it could be credit cards. It's tough to get a loan right now. The vast majority of Americans own a credit card, and in 2020 and 2021, they pretty much all paid them off. But now we're starting to see credit card debt grow and grow even bigger and faster than we pretty much ever have seen. That could be for a lot of reasons, but that debt eventually needs to be paid off, and it's only getting more expensive as interest rates rise and inflation takes over. But now your stock market is also going to take a massive hit. All of those companies that trade are looking to have better earnings reports and bigger and better profit every single quarter. If people aren't spending any money, then their profits and revenue are going to take a hit. And investors are not going to like that. They're going to see that the companies that they have invested in are losing value and they're losing profits. And that's going to make them fearful of what could come next. And they're going to pull their money out. And you could see that in mass in 2022. And even more still, if these businesses have a lot less money because their profits get slashed, then how are they going to be able to pay their workers? They won't have any money either, so that could lead to downsizing. This entire situation of inflation just going up because Americans can't spend as much money is a big issue, and it's not going anywhere anytime soon. And the only thing that we all can do right now is to keep our eyes open and to prepare ourselves for what's coming next. But now I want to hear from you on this issue. What do you think about inflation continuing to rise in the United States? Do you think that it's going to go even higher throughout 2022? Or do you think we're at the breaking point and inflation is actually going to start coming down sometime soon? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out uploads 7 days a week over here on this channel. And I've actually got another update ready for you right here. So be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.